Good afternoon, everyone. My name is Chris Cooper, known as the Channel Guy Trader, and I'm reporting to you live from Wall Street Trading's Miami office down in sunny South Florida. Today's date is Saturday, May the 18th, 2013, and here is this week's weekend review brought to you by wallstreettrading.com. If you have not been to the website yet, go check it out. There's a lot of free information for you guys there that are interested in looking at some free education. At the same time, you can go to our website and sign up for our 14-day free trial to our live online trading room, intraday actions for you guys out there. So make sure you go check it out. A lot of good stuff, a lot of key accurate market analysis on an intraday basis if that's what you're looking for, as we track the ES to trade our stocks and our equities and our options and etc. And we trade a whole bunch of different things. Some guys trade options, some of the guys trade futures, and some of the guys, of course, trade equities. So if you get a chance, go check it out. Got a great video put together for you guys here. A lot of hardcore key analysis that I've been showing you guys. A lot of things are playing out exactly how we've been talking about them, and a lot of good stuff. So I hope you guys are enjoying your weekend so far. And after this analysis, you'll be able to enjoy your weekend even more after you see what type of stuff we have going on here and how you're going to be able to take this information and maneuver through the markets with a little bit of guidance along with your analysis next week, folks. So let's go ahead and jump into the charts. And before we do that, I want to show you guys how the indices close out the week here with a couple of key sectors as well. Starting off with the NASDAQ based off of stockcharts.com. And I say that because I could have swore 1 week I was looking at this information and the numbers just didn't match up. So, this time it looks correct. Maybe they had a little glitch that week or something. So let's go ahead and get into it. NASDAQ was up 1.75% for the week. The Russell 2000 was up 2.31% for the week. The Dow Jones was up 1.74% for the week. The S&P 500 was up a little over 2% here, closing the week out up 2.06%. The crude oil in general here was up 0.86%. If we take a look at gold, definitely the sore thumb of the asset classes right now. If you've been investing in gold since last October, or even before that, but last October was really when this momentum to the downside started kicking in here. But if you've been investing in gold, you just have been underperforming pretty much all the other asset classes, most of them out there, pretty much all of them, I would assume here. But in any case, gold is down 5.32% this week, and that's from the GLD. If we take a look at the TLT, we had some sell-side action in the bonds. They rallied a bit earlier in the week, but they got pretty hard. They got hit pretty hard from Thursday and Friday. And I believe that happened starting off from some of the slight selling pressure we had on Wednesday. I believe it closed up Wednesday. Either way, the TLT was down 0.66%. We'll be taking a look at those charts as well. The financials, the XLF was up 3.31%. All right, those definitely were the strong group out of the market this week. Taking a look at the OIH for the energy sector, the OIH was up close to 1.5% here, closing up 1.47%, and then we had the semiconductors up 1.25% as we're starting to see some nice action in the technology stocks, which we have been calling for 2.5 weeks ago. All right, and now you're starting to see it all on CNBC and everybody saying buy technology stocks. And if you would have just watched our video that we put out on a weekend basis and on an intraday basis and after the market closes, you would have been all over that, as some of our key subscribers and followers were. So in any case, let's go ahead and look at the charts. Got a great video here for you guys, so make sure you tune in. Starting off with the SPY monthly chart here. You can see the SPY monthly chart, we're above all these little previous highs that we had right here, these little previous resistance highs, these little zones, previous resistance zones. We're above that right now, and we have a nice strong trend that's taking place on the monthly chart. As you can see, we're trending pretty hard on the monthly, and that's why we are having this nice little power trend on the markets right now as well. And so far on the monthly chart here, we have had 1, 2, 3, 4, 5, 6 consecutive higher closes so far, and we could have another one this month as long as we continue to trend higher and stay near those and stay on the upper end of the range here. without going back below this 159.66 level on the SPY, which I don't think that's going to happen. So I would have to assume, based on how we're trading right now, that we're going to have, 7 consecutive higher closes here on the monthly chart pretty soon. In any case, you can see the SPY closed at 166.94. We take a look at our weekly chart. Now, this is where it gets a little bit interesting because on our weekly chart, we already broke above the forecasted trend line of resistance from this little pivot low, this pivot low, this little pivot low right here. You take that body, you duplicate it, and that's your target. So we come from the bottom of the channel to the top of that channel right there, and we're at that target. So now we have to see if we're going to hold above that level. And if we hold above and start closing above it, then we're going to start entering a nice accelerated trend, which is already going on the daily chart, which we'll see here shortly, which I'll show you guys here shortly. But we'll see if we get rejected sometime next week and we close below this level here, and we break out, make new highs, and we close below the level. That'll be something to watch out for. But other than that, here the markets are looking pretty strong. Okay, and if you take a look at the daily chart here, once we broke over this 160 resistance and everything, we pretty much started this nice little power trend. Okay, nice little accelerated trend line. All right, we did have some resistance at that key level that I mentioned to you guys to watch from this little channel level that we had right here that broke down. Remember, key levels are always important to put on your charts. Key trend lines, key levels, keep them on the charts because sometimes they do come in play, later on down the road. And it acted as resistance right here. It acted as resistance a little bit on Thursday, but then Friday we chugged right up into that level there, and we'll have to see if we continue to hold above that trend line going into next week's session. But other than that here, you can also see our accelerated trend line. This was our main trend line, and then we've been in this nice little power trend line here since April the 22nd. Now it's going to get real crazy if we just start another accelerated trend line and we just start moving up parabolically. That would definitely be an area that when we see a nice little reversal topping tail, would be a good area to get short. Right now we had one sell side action last week Thursday, which had a little bit of a catalyst because one of the Fed members out in California, I forgot the guy's name, I believe his last name was Williams, though, he was talking about the Fed stopping the bond buyback stimulus program that they're doing right now, and pretty much the QE action. And right when he said that, the market started selling off. And when that does happen, then we're going to see some action, guys. Because every time they talk about removing stimulus, the markets tend to pull back. So what's going to happen when they really do it? Are we going to just have a hardcore sell action? We'll see. But right now, let's focus on the now. And right now, we are continuing to trend above these key moving averages that we're using as a gauge that we've been telling you guys, of course, to use as a gauge here. The 5, the 8, the 20. Well, the 20's just been hanging down here. The distance is getting wide between the 20 and these faster moving averages. But again, just use these as a gauge here because we have no resistance above us. The only resistance that we have is when we actually create one. And until we create one, then we just have to keep on moving along with the trend here. Now let's take a little quick look at the ES because I actually went ahead and did some more work off the ES here to get you guys some decent price projections. And you can see right here off the nice extended leg that we had right here from that little demo, this nice little compression pattern that I put on the chart here, which again I explained that in one of my prior videos. All right, and you can see off of that move we have already extended 138.2% of that move there from this move up, this little pullback, the minor pullback, then to the explosion that we had right there. Okay, we're up 138.2% extended from that measured move. Okay, so now the next target, of course, is going to be this 150 level, and then the 1680 level will line up with the 1678 level will line up with the 161.8% level. So we're going to keep on using these as targets, obviously, to kind of get a idea of where we could possibly find some resistance. But until then, we're just continue to make these nice little continuation patterns and moving higher or whatever. So just keep those key moving averages in the daily time frame on watch. All right, and I know I kind of dragged that on a bit there, but that's what you want to be looking at right now. Get some nice measured moves to try to find an area where you can take off some of your longs, or maybe look to maybe look to put on some shorts and some weak stocks or whatever. And that was the ES. Let's see here. All right, this is something that I want to show you guys, because if you guys recall, I talked about this nice little area that we had down here where they were showing some buyers come in on the charts down there on that level. All right, and then we had the breakout, we had the back test, and that's when the explosion came. And this was the nice little compression pattern off of these little levels right here from the channel system. So that stuff worked out pretty well, guys. Again, you want to make sure you go to our website, check it out, and take a look at some of the analysis that we put out there. I mean, a lot of guys that follow us as well, they follow us on our Facebook page, Wall Street Trading. I post a lot of charts intraday on that Facebook page, so make sure you go check out our Facebook page as well if you have not had time to go to the website yet and you're on Facebook a lot or whatever. I don't know. All right, so let's go ahead and take a look at the triple Qs, starting off with the NASDAQ. I'll definitely make sure I update you guys on that NASDAQ futures chart. Starting off with the monthly chart, well, guys, we have come a long way. We're finally starting to make some of this sell-off that we had back down here in the tech bubble from the 2000 March high to the October 2003 low. All right, we finally broke over that key 50% trend line that we've been tracking over here. All right, and now the next move to the 61.8% retracement, which makes sense, where we actually broke down out of, is right here at 82, which means this move right here still has about another potential of 8% in the triple Qs, which leads me to believe, especially after I did all my analysis this morning, we had a nice little meetup group here for our meetup.com page, Wall Street Trading South Florida. We had a nice little meetup here at the office, which we do two days out the month, and we did a whole bunch of hardcore analysis, and a lot of these markets are looking like they could go, another 5% to 8% higher, which kind of gives me the reason to believe why we have people buying these highs up here, because these managers, they have missed out, but at the same time, they're putting money to work here, because we do have a potential, all right, and potential is a key word, to move up another 5 to 7 to 8%, and that's pretty good if you're a money manager and that you've been doing nothing with the cash, and now you see the trains leaving the station, and you want to get on board, and if there's still some more room to go, you're going to get on board, because like they were saying on the Bloomberg radio that I was listening to here, some of these guys are underperforming the market. So if they don't get any alpha for their for their investors or for their clients, they're going to be looking pretty sad come summertime when their clients tell them, hey, I want to close my account because I'm going to move to a different manager to manage my money. So that's something to take into consideration. Again, the monthly chart of the triple Qs finally broke over the 50% Fibonacci level from the sell-off that we had back in the 2000 tech bubble sell-off, and now the next target's up here towards the 61.8, around that 82 level. So that's how the monthly chart's looking. Let's take a look at that weekly chart. The weekly chart, if you guys recall, the NASDAQ was the choppiest index. It was just making new lows, and it'll make new highs, and it'll fall right back down. A lot of chop action in the Qs, but now we have had 1, 2, 3, 4 consecutive higher closes. You can see the trend's actually pretty good there. It's not at a little slight angle, but it's actually at a steep angle here, and well, not too steep, but it's actually at a nice little angle here for the slope of that trend there, and we look like we have some more upside. Okay, nice move above the key short-term moving averages on the weekly chart. And now let's go to our daily chart here. And the daily chart continues to be in this nice little power trend, which is, still looks like it has, again, some more steam to go. You want to be using these key short-term moving averages as you gauge here, which you can see we've been trending above those pretty strong. So once we start closing below that moving average, that's when we'll start getting a clue that, okay, maybe some money's starting to come off the table a bit here. So in other words, the triple Qs are looking pretty decent as well. I've been having somebody on the YouTube has been telling me to take a look at the Dow Jones. So I'm just going to look at the Dow Jones via the ETF, the DIA ETF, which you can see is making new all-time highs. Take a look at the weekly. The weekly We're back above the 2007 sell-off highs there when the market started getting weak a bit up there. Then we had that rollover back here in '08. We're back above those highs though from that 2007 October level there, and the weekly chart looks pretty good. This nice little tight consolidation here into the rising moving average, and we've been up since. All right, now we take a look at the monthly chart. Monthly chart's good. Already looked at that, and the daily chart again still grinding higher. Well, not grinding, but still cruising higher, I would like to say, and looking pretty decent still. So that's for the Dow Jones, for that gentleman out there that has been asking me to take a look at the Dow Jones for them. Now, let's go ahead and take a look at the Russell 2000, a nice little measure for the small caps. Nice little measure of risk that people want to take a risk in these small cap companies there. And the Russell 2000 monthly charts making new all-time highs. As you guys know, the Russell 2000 was the first index to make new all-time highs, and we're cruising higher there. Now you take a look at the monthly chart, and let me put the moving averages and everything back on here real quick. And that's holding the moving average pretty nice there on the monthly. After breaking out that little range, I'm going to show you on the weekly chart here. All right, so we had that nice little range on the weekly chart, and we finally broke out over that 95 level, and we have two consecutive higher weekly closes above that breakout level, which is pretty good if you're looking for some type of confirmation, like some of these institutions and some of these swing traders and the position traders look for. Daily chart looking pretty clean, of course, just like the other indices, trending above these fast key short-term moving averages. And until something changes, gotta just stick with the trend. All right, what are we going to go over next? We're going to go over the currencies. Then, of course, we still have to go over the stocks. So make sure you tune in the full video if you want to get some good analysis on what stocks out there have the potential to move much higher. All right, so the dollar futures chart. This chart has been showing us some strength. The dollar is rising with the market. All right, a little bit changing characteristic there. We have been seeing the dollar, every time the dollar seems to get some weakness, the markets were tending to pull back. But for the most part, the market's up for the year and the dollar's up for the year. So that little inverse correlation that we've come accustomed to, all right, is not actually working anymore. They're actually kind of starting to correlate a bit more and a bit stronger now. Usually when intraday, if I'm, correct me if I'm wrong, but intraday, when the dollar rises, I've been seeing the euro pull back, which of course is normal, but then I've been seeing the market move a little bit more in correlation with the U.S. dollar, and I'm gonna keep on tracking that. Maybe it was for a couple of days, but I'm definitely gonna keep an eye on that. But main point, dollar is showing us some strength. We are seeing some weakness in some of these material stocks that have not been able to catch a bid. So of course some of the stocks are going to catch a bid with the rising market, but some of the weaker material stocks that have not been performing at all, those are the ones that are either trading sideways to lower with the strong dollar. We're also seeing the other currencies depreciate against the dollar, and it looks like right now a lot of people are putting money into the dollar and into the U.S. equity market, and some of these other global equity markets out there are making some amazing moves as well, like the Nikkei. All right, so dollar's looking pretty strong. Let's take a look at the euro, because the euro is breaking down. Of course, we've been all over this euro trade. I actually started trading the euro futures for the first time last week and did pretty well on them. And I want to make sure I trade them next week again, because there's definitely going to be some more action in this trade here. But the euro finally broke down out of this little range between 130. Ever since then, we've been getting that nice selling pressure. And we do believe that we have a chance to come down here towards that 1,275 area. Of course, we have some buyers try to come in here now, but we do believe we have some more room to the downside. If you take a look at the weekly chart, I have some more of my channel stuff on here. But if you take a look at the weekly chart, we broke over that key trend line right here from the channel. We rose up, we pulled back in, we rallied back up. We had some more resistance back right here at one of my other key trend line levels here, channel levels. And now the euro looks like it has a nice little clean head and shoulders pattern on it here. You have your left shoulder, your right shoulder, you have your head right here, and you have your neckline around the 127 level. So if this breaks down, guys, you can expect the euro to actually make a fast, sharp move down if it breaks below 127, and then you can expect the dollar to make a nice move up, and you can expect the equity markets to get some very good volatility. With some of these currencies start to act a little bit crazy. All right, so be on the lookout for that right there. I'm kind of predicting that along with some pullback in the bonds, which we'll take a look at as well before I go into the stocks. So monthly chart of the euro, still making these little lower highs here. And the reason why I'm going over some hardcore analysis on the euro, because I do believe the euro is setting up for a decent move to the downside. And of course, if not, then we'll we will reanalyze. We will review our analysis and then go from there. But again, keep an eye on that. So what else did I want to cover here with you guys? Over that. All right, let's go and take a look at the bonds. All right, last week I touched on the bonds a little bit about the head and shoulders pattern that we have on this is the monthly chart, which is doing nothing right now. Well, actually, real quick here, the monthly chart popped up last month, got rejected this month, and if we close below this level right here off of that little shakeout move, that would be pretty nasty. All right, I mean, not good. All right, and the weekly chart has a nice little head and shoulders pattern here on the chart. All right, the neckline's around 112, and if this plays out, what is this actually telling us? If these bonds break down, of course, rates are going to start creeping up. And then that's probably going to be the next thing they're going to talk about on TV is rates starting to creep up a little bit or the bond market breaking down and the bond bubble and stuff like that. So we definitely got to keep our eyes on the ball here because we have some interesting action shaping up in the equity markets. We have some interesting action shaping up in the currency markets. And the equity markets are just, on fire right now. All right, so that's the bonds. That's the TLT. You want to watch the TLT. That's the weekly chart. The monthly chart you see right there, the daily chart, you see had a little mixed week. Again, we opened up lower. We gapped up, then we sold off. This is just trading crazy right now. But in general, this whole action we had for the week, I would take that as another bearish tone because we did, close lower from where we closed last week. We closed down here. Okay. So let's see what happens. Again, one way that I told you guys last week to play the short action on the TLT is via this inverse ETF that is 3 times short the Treasury, 30-year Treasury, or actually 20-year plus. All right, is a TMV here, and it's starting to get some more volume, and it's starting to move up a bit. If you take a look at the weekly chart, this ETF has been dead, and now it's trading in a range. So it held that area down here. I would say 1, 2. 3, 4, 5. It's been holding this area for a while now, so maybe we're going to get a nice little push back up to the top of the range, which we done before, which we done before, and then we'll see what happens up there. So I'm expecting some more pullback action in the bond markets, which means we should have some more upside action in the equity markets, especially with how everything's lining up. All right, so that's for the bonds. Let's go ahead and take a look at some of these commodities here. Starting off with crude oil, which has been showing some bullish action as of late, and it may be making its way to move over this key 98 level. At the same time, the commodities that have been acting bullish have been copper, which is still kind of weak, but it's still starting to catch a bit now. Copper and then crude. Of course, these are the growth commodities. Some of the other commodities, such as gold, silver. I'm not sure about platinum, but these precious metals they have been selling because I guess they were the safe havens, obviously, and nobody is making any return on that because gold's been going straight down, and they're taking money out of that and they're putting it into these other assets that make sense that are making everybody else money, and now they have to try to catch up and make some dinero, gain some alpha for their portfolios to make some cash flow. All right, so the crude oil. All right, we had that nice little calculated trade right there from the head and shoulders breakdown, your left shoulder, your head, your right shoulder here. And then we broke back above it, right? But if crude oil, like I was explaining to everybody this morning at our meetup group here we had at the office, if crude oil was really bearish, it should have stayed below this trend line right here from the nice calculated move from the head and shoulders pattern. It should have never broke back above 92 like it did right here. Then when it sold back above it, it did right here. And then guess what? This week on Wednesday when we had the reversal, guess what? It went back there and it held that key 92 level. So big institutions, in my opinion, are putting their money to work right here against this 92 level on crude oil. And now if it triggers over 97, we're going to be making a move towards 98. We break over 98. We're definitely going to have some buyers in here because then we should be looking for a move over 100. If you take a look at the weekly chart Still has this nice little triangle on it. At the same time, in that inside of that triangle, we had this nice little downward trend line that we've been using as a gauge. Well, we used it the first time as a gauge for the breakout right here, but then the back test held, and now we're kind of forming this little resistance right here around the 97.50 level while we're making these new lows. So all we need to do now is just make a new high, trigger some longs, and we may have people looking to start buying this crude oil. So make sure you keep an eye on that. As I discussed in the past videos here, I am looking for a big move in crude oil. Not sure if it's going to be to the top side, but how it's acting right now and how things are shaping up. And if the so-called global economy is growing again and better, well, people are going to need more oil, and this thing may be setting up for a break to the top side. We just have to watch it. There's this nice little compression pattern here on the monthly chart, which is going to be very powerful when it does break out, folks. So keep an eye on that. I've been talking about that for the past 2 months plus or so. And when it plays out, we're definitely going to be on top of it, whether it be buying crude oil futures, USO options, USO outright, DBO, something. We'll keep you guys posted, though. All right, so let's go ahead and take a look at gold. All right, gold, again, this thing has been just getting beat up here lately and has not been able to catch a bid at all ever since it broke this nice little downward channel here. And as you guys know, when a downward channel breaks to the bottom, it usually, most of the time, it lines up with a key level like it did right here. And it just becomes like a free fall whenever you get a break of a hardcore technical level like it did right here. Then we rallied back up, trading this nice little range. Let me zoom in here for you guys. Then we rallied back up, traded it in this range, this $25 range between 14.50 and 14.75, and we have not been able to catch a bid since. And looks like the trade is going to be to recheck these lows down here. And if you're not short from anywhere above, I would say 14.20 and 14.35, it's kind of hard to get short right here because the risk to reward is like a 1-1 right now. So in my opinion, I think gold is going to just drift lower. All right, and then we'll see how those buyers and sellers react around these lows at 13.20. If you take a look at the weekly chart, gold stayed below the 200-day moving average right here. We actually got a nice little hardcore close below the 200-day exponential and simple moving average right here around 1440. And of course, like I said, the next target is back down towards these lows around the 1320 area. If you take a look at the monthly chart, we have some support around this 1330 area, but we break below 1330. The next support isn't till like around 1250, which comes from this nice little consolidation that we had back here. And then we break below 1250. We got this level right here from prior resistance, now support around 1180, call it. So definitely gold is not the asset class that you want to be in right now. Precious metals, you just don't want to be invested in those commodities because there's nothing going on with them. They're losing money. All right, let's see. Take a look at silver futures. I usually look at the SLV, but I'll take a quick look at the silver futures this time around here because on the weekly chart you got a decent level. Silver futures, they're going to have a breakdown below 22. Notice how silver is actually weaker than gold because it sold off and it's already at the lows while gold has not rechecked those lows yet. So if the precious metals were to break down, silver is the one that you want to look for short or on that via the SLV or just shorting the outright futures. And this thing's going to have some support here around $19.29 or $19.30, which means that this thing still has about another $3 to the downside if silver was to sell off here. So just about a little rough estimate there. Again, then we have some support here around 20. All right, that's a good level to work off of because this is a monthly chart. Prior resistance now becomes support. We're already coming all the way from 50. So right there at 20, would be a good opportunity to get long some silver, at least for a scalp trade or something. So keep that on watch. Let's go ahead and take a look at copper. All right, and I forgot to go over the gold miners. I'll take a look at those real quick as well. Copper broke its nice little downward channel right here. Copper, when I come into the office in the morning and I look at the commodities and everything, I usually see copper and crude oil up together, which is pretty good, showing us that there are some, there is some demand for some of the global growth commodities plays, but just the precious metals, I mean, they're garbage. They're doing nothing. Stay away from them. All right, but anyways, copper making a move over 340 should trigger a buy back up towards 350, maybe back up towards 353. We had the nice little downward channel break right here. We had the breakout. We had the little pull down, little retrace, and we had a little higher low pivot here that so far is holding. And if we hold and we start moving to the top side, a break over this 340 high will trigger some longs, most likely to the measured move right here back up to this range around 355. We'll keep you guys posted. The only way to play that via equities will be SCCO or FCX, and you guys can go ahead and take a look at that. All right, so let's go ahead and take a real quick look at the GDX. Whoa, this is a long video here. GDX making a move to the downside does not look like it wants to, catch any bid. GDX is already breaking that little low that we made. Notice how silver is right on top of that low that we made back there. That most of the metals and commodity and precious metals and gold miners made those lows back there around that week of April 15th, between April 15th and April 22nd. A lot of those commodities and basic material, precious metal stocks and stuff like that, they made some lows there. And those gold miners, those are the lows you want to work off of. All right. I know I said that kind of crazy, but just bear with me. What else here? It's been a long morning so far. We've been having a nice little meetup at the office, and now I'm doing this video real quick for you guys for the weekend. But yeah, GDX is looking weak, and this thing still has some more potential to move down to 21. All right, then if we take a look at the monthly chart has some support down here again at 21, which you can see as clear as daylight, because once we broke and hold below 3250, you want to be bearish on the gold miners until we at least get back above 3250. And until then, you want to short the rallies in the gold miners. Okay. What else? So that's about it for the commodities. I didn't get a chance to take a look at the VIX with you all, which the VIX is moving to the downside here. And if we break down out of this range, we start holding below 1250. Look for this little level right here at 12 to get hit. We break below 12. Look for this 1150 level, and just look for there to be another move higher in the markets. Volatility goes down, no fear in the market. The market is going to continue grinding higher. And of course, as intraday traders, we want to see the volatility pick up, but we're not getting that right now. So let's take a quick look at some stocks here. Then I'll end the video. As you guys know, we do our Sunday night video chat in our live trading room. Again, which you can get the credentials for via the website, 14-day free trial form that's on the home page. All right, so we'll just go through a couple stocks here since the video is already long enough. Then we'll touch base on everything on Sunday night. But Apple to the downside, it did hit that 420 backtest level, which I told you guys if you were looking to get long up here, you should wait till we get back at least towards 420 to kind of see if it's going to check this area right here. And that played out pretty well if you were able to follow that right there. And but still looking weak. All right, had a bounce and then it had another sell day when the markets were up. Apple is definitely showing relative weakness, not a name you want to be in, because once the market actually rolls over a bit or gets some selling pressure, this is going to be the first one that will usually get hit, unless, of course, they come out with some upgrades or something happens to it, or just whatever, something that we can't, something that we have no control over. All right, so just keep an eye on Apple. We're seeing some strength in some of these technology stocks, again, which we've been talking about. IBM actually recovered all of its gap down from that news, and then you see this nice little symmetrical triangle action off that key trend line that we had here from the prior channel. All right, right there, that little black trend line down at the bottom. Notice how it came into play right here again. All right, and this thing now should have another move higher. A measured move could take this all the way back up to highs, guys. And we know that there's a lot of buying pressure coming into the technology stocks since the NASDAQ is finally getting some momentum and breaking out. And again, I posted this on the Facebook page. CNBC, they're talking about buying technology stocks now. They weren't saying that 2 weeks ago, but we were. We were saying to buy technology stocks right here if we were to hold above this key trend line that we've been tracking from our proprietary channel analysis. We were saying to buy technology stocks. And if you take a look at those names, Cisco, Oracle, Red Hat, ACAM, those stocks have been moving higher. All right, let's just go ahead and take a couple. Let's go ahead and take a look at a couple of them here. ACAM, this stock has been on fire. All right, has been on fire for the past 2 weeks or so. VMW, all right, this stock has been moving up as well. A little bit choppy, but it had a nice little move back here. Flagged, has not broke out that flag like it should on a nice little clean pattern, but it's still moving higher. EMC, this stock on fire. It gave you the nice little downward channel to work off of right there. STX, NTAP. All right, all these data storage technology companies are moving higher because these companies, I guess, they're starting, it's starting to come down in the cycle now where they're actually starting to make some money. Maybe the profit margins are getting better. Whatever the case may be, these are the stocks that you want to be invested in if you're looking for that, another 5 to 7% in the market. You want to be invested in technology stocks. Okay, and that's what we said 2.5 weeks ago, people. What else? Amazon. Amazon's starting to pick up some nice momentum as well. Definitely looking for Amazon to break this little trend line right here that we have from the little downward channel. And if Amazon was to break that nice little trend line from the downward channel, okay, our target will be back up here towards the 275. We break over 275, then we'll be looking back up towards 285. But since we're above the 50% trend line of the wide channel, we're interested in buying dips in Amazon. All right, especially as long as we hold above this key 264 level or so. So Amazon looks good. Let me take a look at eBay real quick. See how eBay's looking. eBay's all right. 1 second. Just want to bring up something real quick. Yeah, eBay's doing pretty good. I mean, a lot of the technology stocks are doing good. I mean, you could take a look at CHKP. Some of these software companies are doing pretty good too, especially since all that news that we're hearing about these software companies getting broke, these companies getting hacked into. These software companies have been catching a bid, but CHKP, these Chinese stocks, Baidu, Sina, Sohu are catching a bid. Some of these semiconductor stocks, ALTR, Altera. Okay, that one's looking pretty good for next week. Keep an eye on Altera. QCOM. I believe I talked about QCOM 2 weeks ago when it was right here on the gap down. You can see this one has had to move from 64 to 66.5. What else we got going on here? Microsoft has been on a tear. This one has just been on fire. So there's some things out there to do, guys, but you just have to be careful and manage your risk because the levels that we're up in the market right now are pretty extreme. And I talked to a lot of people that have been in the business for over 20 years. I mean, I've been trading and I've been in the business for say 6 years, 7 years now. But I talked to some guys that have been in the business from the tech bubble sell-off and everything. They're like, whoa, we're seeing some stuff that we haven't seen before. And again, we have no control over what the Fed is doing and how the Fed is intervening in the markets. But hey, what can we do now? Real quick here, if we go up some more next week on the ES, you want to watch the 1671 level for the 150% extension move, and then that 160, 180 level around 1680. I have a friend on Facebook that says the top is at 1680, but it also lines up with that fib level. Let's see if he's right. All right, folks, too much of a long video here. I know I talked kind of fast throughout the video, so bear with me. Try to keep up, I guess you could say. And have a great weekend, folks. Cheers.